Euro dollar. So the euro remains under pressure following the impressive breakdown that we've seen in recent days, and the focus now is on a retest of the July base at 108.09. At this point, look for any corrective rallies to be very well capped into the 111 to 113 area, with only a break back above 113 to really take the immediate pressure off the downside. A break below 108.09 would then expose that multi-year base at 104.62 further down. Sterling dollar. So cable remains pressure to the downside despite some minor recovery rallies in recent trade, and any rally should be very well capped into the 154 to 155 area. Ultimately, only a close back above recent highs at 155.10 would take the immediate pressure off the downside, while a break above 156.59 would be required to shift the structure. Look for rallies to be well capped in favor of the next downside extension below recent lows at 151.07 and towards those psychological barriers at 150 further down. Dollar yen. So dollar yen has been locked within a choppy consolidation over the past several weeks, and the market has seen some intraday volatility in recent trade. But while the market holds below 120.174 on a daily close basis, the overall pressure remains on the downside, and there's risk for a bearish reversal back down towards recent lows in the 118 area, below which exposes that critical August base at 116.12 further down. A close above 120.174 would, however, force a shift in the structure. Euro Swiss. Not much going on with Euro Swiss, with the market locked in a multi-week, multi-month consolidation right now, although the recovery structure remains intact following those impressive gains earlier this year, and the market is focused on a break of recent highs at 110.50 going back to September, which exposes 112 further up. At this point, only a break back below 107.14 would compromise this outlook. Aussie dollar. So Aussie remains confined to a well-defined downtrend, and the market is now focused on a retest of the recent multi-year lows just ahead of 69. At this point, look for any rallies to continue to be very well capped ahead of 74, while ultimately only a break back above 74.40 would compromise this outlook. Dollar CAD. So despite some minor setbacks in recent sessions, dollar CAD is firmly looking towards a retest of that multi-year 11-year high at 134.57 from back in late September. At this point, any setbacks should continue to be very well supported, with only a break back below the 128 area to compromise the constructive outlook. Kiwi dollar. So Kiwi dollar has seen a little bit of a bounce in recent trade, though the market remains confined to a broader downtrend and should ultimately continue to be very well capped on rallies towards 70. Look for deeper setbacks over the coming sessions and a bearish resumption back down towards those recent multi-year lows in the 62 area. SPX 500. The S&P 500 has mounted an impressive recovery rally off those August lows and now is within a stone's throw away of the record high from May at 121.37. At this point, any additional upside should be seen on a break and close above 2100, while a break back below recent lows that we saw at 2060, 2058 would be required to take the immediate pressure off the top side. Gold. So despite some setbacks in recent trade, gold remains constructive and within a recovery outlook following that rally off the 1073 multi-year base that we saw earlier this year. At this point, look for the current round of setbacks to be supported somewhere in the 1130 area ahead of the next major upside extension back above recent highs that we saw just shy of 1200 at 1192 and towards 1233 further up. Really, only a close back below 1100 would compromise the recovery outlook for the gold market.